Ms. Culpepper, we need a few minutes about your e-file provider account. I have 5 years of transmission records that don't match what your clients were given.
Renata Culpepper spent 13 years being the one person in her neighborhood who made taxes make sense. Almost 3,000 refunds later, investigators say that trust was the whole scheme.
I kept telling myself this season would be the last one that I'd catch.
Nearly 3,000 returns, Ms. Culpepper. That's not...
She would not get the chance to blank out one more secondary deposit field before federal agents were standing at her front counter. Within weeks, investigators would trace $612,000, skimmed out of nearly 3,000 tax refunds over 5 years, a few $100s at a time, redirected into an account she controlled while the paperwork sitting in each client's own hands showed no sign anything was missing at all. Most of her clients were working families claiming tax credits meant to help them get ahead, the exact kind of refund large enough and complicated enough that nobody thought to check the deposited number against the number printed on their own copy. 2 junior preparers working alongside her for years had no idea what the shorthand notation in a shared spreadsheet actually meant. What began as one quietly appended bank account would end with the IRS's Criminal Investigation Division unwinding a scheme built entirely on the fact that she was the one person in the room who actually understood the paperwork. The amount you just heard, $211 average, sit with that for a second. Small enough that almost 3,000 people never noticed. Drop your reaction in the comments and subscribe if this is your first time here. Renata Sue Culpepper was born in 1979 in Terre Haute, Indiana, the oldest of 3 children. Her father worked on the line at a factory that manufactured auto parts on the city's east side for over 20 years. And her mother, though she never held a professional license, did informal bookkeeping and tax preparation for neighbors and extended family at the kitchen table every winter, working from a stack of IRS instruction booklets and a hand crank adding machine. Renata grew up watching her mother patiently walk confused, exhausted neighbors through paperwork that intimidated them, and by the time she was in middle school, she was helping alphabetize the family's folder system every January. She graduated from Terre Haute South Vigo High School in 1997, and rather than pursue a 4-year degree, took an entry-level seasonal position at a national tax preparation chain the following winter, drawn to work that felt, to her, like an extension of what she'd watched her mother do her whole childhood. She was promoted to a year-round position within 2 years and spent the next several seasons studying for the IRS Enrolled Agent exam on her own time, a credential that would allow her to represent clients directly before the IRS, finally earning it in 2005 after her second attempt. In 2011, at 32 years old, she left the chain to open her own storefront, Culpepper Tax and Bookkeeping, in a strip mall on the city's east side not far from where her father had once worked. She built her client base almost entirely through word of mouth in a working-class community many larger firms treated as an afterthought, developing a reputation for patience with clients who found tax paperwork genuinely bewildering, several of whom were the first in their families to file anything beyond a simple W-2 return. She hosted free tax literacy nights at the public library twice a year, walking neighborhood families through what a W-2 actually meant and how the earned income tax credit worked. Sessions that, by 2016, were drawing 40 or 50 people a night. A 2016 profile in the local weekly paper described her office as the place on the east side where nobody makes you feel stupid for asking a basic question, a line she reportedly kept clipped and taped inside her desk drawer for years afterward. Her business grew steadily through the mid-2010s, eventually employing 2 junior preparers she trained herself each season and serving over 1,100 individual clients a year by 2018. Her personal life, over that same stretch, grew considerably harder. She and her husband divorced in 2017 after 14 years of marriage, leaving her the primary custodial parent for their 2 children and the sole income for a household that had previously run on 2 salaries. She took out a small business expansion loan that same year to add a second office suite and hire additional seasonal staff, a bet on continued growth that assumed the walk-in volume she'd built over the previous 6 years would keep climbing. At the same time, the rise of low-cost online filing software had begun eating steadily into the walk-in client volume small storefront preparers like Culpepper had once relied on, flattening her revenue in a business now carrying a loan payment that did not flatten along with it. Therefore, heading into the 2019 filing season, the woman half of her working-class East Side neighborhood, trusted more than they trusted their own math, was sitting behind a desk with a business loan payment she couldn't comfortably make, a mortgage now carried on one income instead of two, and, for the first time in her career, a genuine understanding of exactly how invisible a few $100s could be inside a refund most of her clients had never learned to read closely in the first place. The IRS's electronic filing system allows a tax preparer, on a client's behalf, to split a single refund across up to 3 separate bank accounts, a feature originally designed to let taxpayers automatically direct a portion of their refund into a personal savings account or a retirement contribution, without needing to manage the transfer themselves after the fact. The split instruction is transmitted electronically directly to the IRS as part of the return, while the printed copy a preparer hands a client showing their refund breakdown is a separate document the preparer's own office software generates and can, in practice, be edited independently of what was actually submitted. Most of Culpepper's clients did not review their returns line by line before she filed them electronically on their behalf. Many were claiming the Earned Income Tax Credit or the Additional Child Tax Credit, refundable credits that can produce a lump sum refund in the thousands of dollars for a working family with children, larger and more complex than a simple wage withholding refund, and precisely the kind of number a client was unlikely to cross-check to the dollar against a routing detail buried in paperwork they'd trusted their preparer to handle correctly in the first place. Culpepper had spent 13 years cultivating exactly that trust, hosting library nights, remembering clients' kids' names, being, for a meaningful segment of her neighborhood, the only person who had ever explained a tax credit to them in plain language. The IRS's own oversight of small, independent preparers relies heavily on pattern-based fraud detection run against the entire national pool of e-file providers, a system built to catch statistical outliers rather than to individually audit every preparer's split refund submissions in real time. A single small storefront office generating a modestly elevated rate of split refunds, particularly one serving a client base that plausibly had legitimate reasons to want a portion of a refund automatically routed to savings, was not, on its own, the kind of signal that guaranteed early detection. Compounding that gap, Indiana, like many states, does not independently license paid tax preparers beyond the federal enrolled agent credential itself, meaning the state's own regulatory apparatus had no separate mechanism for periodically reviewing a small preparer's actual filing practices, absent a specific complaint triggering one. That system, built on the reasonable assumption that a preparer's professional credential meant something, worked exactly as intended for 8 years. It also meant that once Culpepper decided to start quietly appending a second deposit to a fraction of her returns, there was no mechanism inside the IRS's ordinary processing pipeline positioned to catch it before real money had already moved. The first documented diversion traced back to the 2019 filing season, when Culpepper began entering a small secondary direct deposit instruction, typically between $80 and $340, routed to a business checking account she had opened under a dormant LLC called CTB Processing Solutions, alongside a client's legitimate primary deposit. On returns generating a refund large enough that the added amount would represent a small enough fraction of the total that a client checking their bank balance against their general expectation, rather than the exact printed figure, would be unlikely to notice. She refined the practice quickly. By the 2020 season, she had trained her 2 junior preparers to leave the secondary deposit field blank on the client-facing printed copy of the return, while still transmitting the full split instruction electronically to the heirs. Ensuring the paperwork a client kept at home for their own records never showed any indication a second deposit had been authorized at all. She reviewed and personally e-filed every return, generating a refund above a certain threshold herself, rather than delegating those files to her junior staff. A workflow that looked, to anyone observing the office, like simple quality control on the season's largest and most complex returns. Internally, she tracked which client files had been modified using a column header abbreviated SPELT in a shared office spreadsheet, telling her junior preparers, when either asked, that the notation simply meant a client had requested their refund be divided for personal savings purposes. A plausible enough cover story that neither preparer had reason to question it in the years that followed. The scheme concentrated deliberately on clients receiving the earned income tax credit and the additional child tax credit, refunds that tended to run into the thousands of dollars, and that, in Culpepper's own later assessment to investigators, families receiving them were focused on the total lump sum landing, rather than auditing its precise composition against a printed breakdown most had never learned to parse in detail. Several of these clients told investigators afterward that they had genuinely believed the total deposited amount simply reflected how tax refunds worked, having no prior return to compare it against. Roughly 60% of the returns Culpepper personally filed each season carried an unauthorized secondary deposit, while her 2 junior preparers, unaware of the scheme's actual scope, applied the same modification only on specific client files Culpepper flagged and handed to them directly. A structure that kept the bulk of the exposure concentrated in her own hands rather than spread visibly across the office. By 2022, the practice had become routine enough inside her own office that Culpepper occasionally fielded direct client questions about a shortfall without any apparent hesitation. On at least one documented occasion, a client called to ask why her refund had come in lower than expected, and Culpepper personally took the call. Told the client the heirs must have applied a portion of the refund to a prior year's balance owed, a plausible and common enough explanation that the client accepted it without further inquiry, and then had the junior preparer who had originally filed the return note the client's file as resolved without any further explanation of what had actually happened. Culpepper used a portion of the diverted funds to keep current on the 2017 expansion loan payments, and the rest largely covered ordinary household expenses for herself and her 2 children. A use of the money her own later statements to investigators described less as extravagance and more as simply staying afloat one season at a time. By the end of the 2023 filing season, the total diverted across 5 seasons had reached $612,000, spread across approximately 2,900 individual returns at an average of $211 per affected return. All of it drawn from a client base that, in the overwhelming majority of cases, had come to her office specifically because they trusted her to make sense of a system they found intimidating on their own. In March 2024, a client who had recently separated from her husband and was reviewing old bank statements as part of a custody filing noticed a $267 deposit from an unfamiliar routing number arriving the same week her tax refund had posted the previous year. A deposit that did not match the refund total printed on the copy of her return Culpepper's office had given her at the time. She raised the discrepancy with the legal aid attorney handling her custody case, who, recognizing it as a potential tax fraud issue entirely separate from the custody matter, filed a formal complaint with the Indiana Department of Revenue on her behalf. The department's referral reached the IRS Criminal Investigation Division around the same time an internal pattern analysis flag, run as part of routine e-file provider monitoring, had independently identified Culpepper's office as showing an unusually high rate of split refund submissions relative to other tax preparers operating in the same region. A statistical anomaly that, absent the client complaint, might otherwise have taken considerably longer to escalate into a formal audit. Together, the two threads were enough for IRS Criminal Investigation to open a full audit of Culpepper's filing history going back 5 years. The forensic audit, conducted over several months in the spring of 2024, systematically compared the client-facing printed copy of every return Culpepper's office had filed against the IRS's actual electronic transmission data for the same returns, a comparison neither state nor federal reviewers had ever previously run against her filings in 13 years of practice. Across the sample, examiners found the secondary deposit field blank on every single client-facing printed copy, while populated in the corresponding submitted filing on approximately 2,900 returns. An unmistakable, mechanically consistent pattern rather than an isolated data entry error. Investigators subpoenaed banking records for the CTB Processing Solutions account and found it traced directly to Culpepper, with deposits arriving in a pattern that matched IRS refund disbursement timing exactly across each of the 5 tax seasons in question, and with nearly all of the funds transferred out to Culpepper's personal checking account within a week of each season's refund cycle concluding. A forensic review of shared office computer files recovered the internal spelt tracking spreadsheet, cross-referencing the abbreviated client notations against the specific returns identified as carrying unauthorized secondary deposits, confirming the notation had been used consistently across all 5 years to flag files for the modification. One of Culpepper's 2 junior preparers, interviewed after the audit became public, described the incident in which a client had called about a shortfall and Culpepper had personally taken the call, telling investigators she had been instructed afterwards simply to note the client's file as resolved without being given any further explanation. An instruction, she said, in hindsight, she should have questioned at the time but had not, given how completely she trusted her employer's 13 years of standing in the community. The same preparer also produced her own handwritten training notes from her first season in the office, in which Culpepper had defined the spelt notation for her exactly as she would later describe it to investigators. A detail that helped establish the junior preparers had genuinely been kept unaware of the scheme's true purpose rather than knowingly participating in it. The smoking gun was the combination of the forensic printed copy versus transmission comparison and the CTB Processing Solutions banking records together. Nearly 3,000 instances of paperwork that told clients one thing, while the electronic filing told the IRS another, and a bank account emptying directly into Culpepper's personal finances on a schedule that matched refund disbursement. Timing exactly. 5 years running. On April 16, 2024, at 9:20 in the morning, the day after the federal tax filing deadline, IRS Criminal Investigation agents and an Indiana Department of Revenue investigator approached Culpepper at the front counter of her Terre Haute office as she prepared to close out the tax season's final client files. "Ms. Culpepper, we need a few minutes of your time regarding your e-file provider account," the lead agent said. She set down a stack of folders and looked at the 2 agents for a long moment. "I think I know why you're here. We have 5 years of e-file transmission records that don't match what your clients were given." She didn't reach for an excuse. "I was going to fix it. Every season I told myself this was the last one, that I'd catch the business back up and stop. Nearly 3,000 returns, Miss Culpepper. That's not one last season." She looked past the agents toward the empty waiting room, its chairs still arranged for a client who would never come in that afternoon. "These are people who trusted me because nobody else in this neighborhood ever explained any of this to them the way I did. And you used that exact trust to take from them." For a moment she said nothing at all. Her hands, resting flat on the counter, were completely still. "I'd like to call my attorney," she said quietly. "I'm not going to make this harder than it already is for anyone." She was placed in handcuffs at her own front counter at 9:31 that morning, in the same office where, for 13 winters, she had walked confused, grateful clients through paperwork she alone understood. The sentencing is next, and one of her own clients speaks directly to the court. Stay for that part. Subscribe if you want more cases like this one. We post weekly. Federal prosecutors in the Southern District of Indiana charged Culpepper with wire fraud, aggravated identity theft, unauthorized use of IRS e-file credentials, and filing false tax return information. A federal grand jury in the Terre Haute division returned the indictment in June 2024. Facing the forensic comparison of nearly 3,000 clients facing return copies against the actual e-file transmission data, along with the recovered spelt spreadsheet and her junior preparer's cooperation, Culpepper pleaded guilty to all charges in September 2024 rather than proceed to trial, an outcome her attorney described in a brief statement as reflecting her wish to spare her former clients the burden of testifying. At sentencing, the client whose custody-related bank review had first surfaced the discrepancy addressed the court. "I came to her because I didn't understand my own taxes, and I was embarrassed to admit that," she said. "She was the only person who ever made me feel like that was okay to say out loud. I still don't fully understand how she took the money, but I understand exactly what it means that she did." The court sentenced Culpepper to 7 years in federal prison and ordered $612,000 in restitution to affected clients. The IRS permanently revoked her enrolled agent status and e-file provider authorization, and the court imposed a lifetime ban prohibiting her from preparing tax returns for compensation in any capacity. Ausa Priya Chandrasekhar, who prosecuted the case, noted in a statement following sentencing that the scheme's true harm went beyond the dollar figure itself, since many of the affected families had specifically sought out a preparer they trusted precisely because the tax system already felt inaccessible to them, and Culpepper had used that exact vulnerability as the mechanism of the fraud, rather than despite it. Culpepper Tax and Bookkeeping closed permanently the week of her arrest, its storefront sign taken down within days. Several of her former clients told local reporters they had already begun filing with a national chain the following season, uncertain, for the first time in over a decade, whether they fully understood what they were signing. She built 13 years of trust one confused client at a time. The case waiting on the right-hand side built its trust just as carefully and broke it just as quietly.